Hi guys, welcome to my YouTube channel. Here I share useful information and tips to help you stay profitable. If you haven't subscribed to this YouTube channel, make sure you click the subscription button below and turn on your notifications so you get notified when next I put out a content on this channel. Okay, so a lot of persons have reached out to me with the concern of not knowing how to place an order on Binance on the spot market. So I decided to create this video to help explain that. Okay, so by the way, if you are entirely new to cryptocurrency trading, I would advise that you make reference to my article down in description. So you have created an account on Binance, and also you have downloaded the mobile app on your phone. And if you haven't created an account yet, make sure you use my referral link on the description to create an account. Okay, then download the mobile app. All right, so this is Binance on my device here. Okay, so as you can see, this is the home interface, and um, our concern today is how to place order on the spot market. So you have funded your account via the P2P market with USDT, Ethereum, Bitcoin, or whatever cryptocurrency you wish to fund your account with. Okay, so after doing that, let's say you want to buy Dogecoin. So you come to the market, the spot market. Under the spot market, okay, so you search for Dogecoin. All right, so you can see all the different pairs Dogecoin is trading with, but we are interested in the USDT pair because you already funded your wallet with USDT. So click on the USDT pair. Okay, then this comes up. The charts, the 1 hourly chart of Doge trading against the US dollar. Okay, so you can change this to 4 hour, 1 day, or you leave it at 1 hour. So you want to buy some amount of Doge with your USDT, so you click on buy. Okay, so on the right hand side, what we have there is the order book. Okay, so another book carries the bid and the ask. The bid are the green who are seeking to buy at a particular price. Okay, buy some amount of Doge at a particular price, while the red the ask are those who are selling off their Doge holdings at a particular price. So for you, you want to buy some amount of Doge, so you would, using the limit order, you would fall under the bid. Okay, so on Binance we have different types of orders you could use on the market. We have the limit order, we have the market order, we have the stop limit, and we have the OCO. Basically, the limit order is an order you place to buy a particular asset at a particular price. Okay, so using the bid, you set your own price you want to buy that particular cryptocurrency for. Okay, and what happens that when you use a limit order, you provide liquidity to the market, as opposed to when you use the market order. When using the market order, rather you take liquidity out of the market. Okay, so if you want to use the limit order, so you set the price you want to buy. Okay, let's say we want to buy from the last selling price on the market. So I click on this last selling price, it fills for me. So how many percent Doge do you want to buy from your USDT holdings? Okay, let's say I want to buy the entire USDT that I have on my balance. Okay, so I click 100%, okay, at that price, and I click buy. As you can see, an order has been placed for me, okay, to buy Doge at this price, at the price of 0.31132. Okay, at the price of 31 cents. Okay, so it hasn't been filled yet, so we'll probably just wait, or I'll cancel it for the order to fill. So while our order is waiting, if you want to you want to just buy, take this thing, you can use market order. Okay, you can use market order, but the difference is that when you use market order, you get charged for transaction fee, as opposed to using the limit order. Okay, so I think I'll cancel this. So if you use a market order, it fills for you immediately. So this is a market price. It gives you the current market price. Okay, so how many percent do I want to use? Okay, let's say 100% of my USDT available. Okay, so I place a buy on Dodge. Immediately it has been filled for me. Okay, I have bought Dodge. You can see my available USDT. It's now 0.0 amount. So I can choose to sell it back. Okay, I can choose to sell it back. Can choose to sell it back using the same market order. Just sell it back. Okay, so I just bought and sold my Dodge. Okay, so that's for market order. So for limit order, I explained earlier that you have to wait till it gets filled for you. Okay, so what we have here next is the stop limit. Okay, stop limit, it's an order you use to manage your risks in cryptocurrency trading. Okay, let's assume you already bought your Dodge. Okay, you already bought your Dodge. Let's get back to buy some Dodge using the limit order. Okay, I use the last person's. Okay, 100%, and there we go. So I think that was quick. It has been filled for me. You can see I have my funds in Dodge now. So I just bought some Dodge, and of course, buying trading cryptocurrency on the spot market to make profit, the price has to go higher than your buying price, okay, for you to make profit. Okay, so I just bought some Dodge, and of course I expect the price to go higher than my entering price. So but in a situation where it doesn't go as I expect, okay, you can manage your risks by using the stop limits. Okay, so basically a stop limit order has both a stop price and a limit price. Okay, the stop price is a specific price you want to set at which to trigger your limit order. Okay, um, your limit price is that price at which you want your limit order to be triggered. Okay, this just depends on your level of risk tolerance. Okay, some may assume 10% risk tolerance. Okay, while some might take 5% or less. Okay, it all depends on your level of risk tolerance. So your stop stop limit, your stop price is the specific price you want your stop loss to be triggered. So it means if the price gets to this your stop price, okay, let's say your stop price is at okay, let's just look at the charts. don't forget we entered about 0.31. So let's say we want to use a stop price at 0.2. Okay, 0.2, 0.2, 0.2, 0.29 thereabout. Okay, so we're back here. So let's say our stop price is at 0.29. Okay, 0.29. All right. So our limit price, we use 0.2, that's 0.25. Okay, so how many percent of the Doge are we selling? Same. Okay, we're selling same 100%. So you can see uh, we're selling back at a value of 88 USDT, which is almost like a 20% loss. Like I said earlier, it depends on your level of risk tolerance. So I placed a sell. Don't forget your stop price and your limit price. When the market gets to your stop price, it's going to open an order for you to sell your entire Doge holdings at this price of 0.25. Okay, but if eventually the market doesn't get to 0.25, or maybe while it was going down, it probably stopped at 0.2, 0.26, okay, which is just very close to your 0.25, but not your 0.25, okay, and it retraces back, good enough, okay, your order will be closed. But if it eventually gets to 0.25, then the order will be executed at this particular price. So I click sell. So you can see if the last price drops to or below 0.29 USDT, an order to sell 353.8 Doge at the price of 0.25 USDT will be placed. Okay, I click confirm. So you can see that order has been created here. So until then, it remains opened here until it gets to that point, then at which it will be executed. Okay, so that's how you use your stop limits to your advantage. Okay, one good thing about it is that instead of allowing your funds to okay to lose value, and which you don't know what time the market will recover, it's better you take some percentage of loss and move on to another trade. Okay, so that's for stop limit. Your OCO, it's a more advanced um, order type. Okay, OCO simply means one counts to the other. It's a combination of a stop limit and a limit order. Okay, it's a combination of a stop limit and a limit order. The limit order is what you use to take profit. Okay, if the price goes ahead of your entering price, which is a price here, your limit price. Okay, and then your stop limit is what you use to manage your risks, okay, on the trade. So it's like a two-way gang order, at which if the price goes in your favor above your entering price and um, your take profit target was, let's say 0.6, 0.6, okay, and then still using the same limit stop limits we used earlier, okay, 0.29, 0.29, and then the limit price at 0.25, okay, same 100. I said, okay, it's not gonna execute because we already have a pending order, a stop limit pending order. Okay, let's just cancel it so we can see how this works too. So we want to take profit from our Doge. If Doge eventually goes up at $0.6, 0.6, and our limit, stop limit, is 0.29 and 0.25. Okay, so 100%. Okay, so this is one counts to the other. So if eventually Doge goes higher than this, our goes higher than our entering price, which was at 0.31, then reaches 0.6, this order will be executed. Our take profit order will be executed, which is the limit order at 0.6. And while it is being executed, this other one will be closed. Okay, that's why it's called one counts to the other. All right. So if on the other hand, the market goes below our entering point and down to our stop limit, then hits our stop limit, it would automatically cancel our take profit. Okay, so you use this also as a way of managing your risks. Okay, so if you weren't around when if the market gets to your take profit, this will automatically place an order for you. Okay, so that you don't miss out on taking your profit. And also, if you are not also available when the market is going down and you want to manage your risks, this will also help you to um, exit the market with some percentage of loss. All right, so that's how you make use of your OCO. How you also make use of your limit order, your market limit, your market order I explained earlier. So guys, I hope you find this video tutorial very helpful. If you do, please like this video and also share with your friends, and make sure also you don't forget to subscribe to this channel and turn on your notifications so you get updated on when next I have a content coming your way. All right, thank you very much for watching.